Hey, folks, welcome to InTheMoneyStocks.com's verified investing alerts. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today's date is Wednesday, February 3rd, 2021. So I want to talk about the markets, folks. I think there's some interesting stuff going on here. I also want to give you guys some trade setups that I think can make you some money in the short term. Remember, I am a swing trader, which means I pick up stocks, I hold them for a couple days, a week, whatever it is, and we look to make a quick move in a stock, 10, 15, 20%, whatever it may be. All right, number one, NASDAQ has turned negative today. Now, this is kind of interesting because yesterday after hours, we saw Google have really good earnings. Amazon was up on the back of earnings. Amazon has gone negative, but Google is still up. And I call it Google, but remember, it's Alphabet, G-O-O-G-L. But again, look at this move, 7.5% on a trillion-plus company. That is a huge move for that company, and it's definitely helping the markets be barely down. Right now, the QQQ NASDAQ 100 is down 20 cents on the day. However, just the fact that the markets are pulling back here is worth noting because, again, it's counterintuitive. You'd think, oh, great earnings from Google, good earnings from Amazon. The markets should be screaming up. The futures were up. The markets opened up, and they faded. And you could see here why. Classic QQQ double top. So we were right into a double top right there. And again, that is a classic double top. And that is one of the issues here is that you had technical resistance. And I think part of it, too, is that the markets are saying, okay, earnings season is essentially over. All the big companies, main big companies have reported. Why don't we take profits and see when the dust settles where we are? In addition, when is the next stimulus coming? We know that's been driving the markets. The Federal Reserve printing of money has been driving the markets. But a concern to me, at least, is that interest rates are moving up. Interest rates continue to move up. That is a big concern because the higher interest rates go, the risk model for a lot of funds out there will start to change, meaning that they're going to start rotating money out of stocks if interest rates get too high. Right now, interest rates are not too high, though, 1.12% on the 10-year. I would say once you get over 1.5%, you more go so on alert. Another interesting chart here is the SMH. The SMH confirmed a major pivot top right here. It fell. Look at what happened. We got back to this gap fill right here, and we stalled out and are selling off today on the SMH, on the semis. The semis, to me, look to be a potential leading indicator of weakness coming up. And, one of the things I noted yesterday is that after 2 days of rally, the investors and talking heads were more bullish than they were even prior to the sell-off last week, even though we didn't take out the highs. It's almost like a negative divergence for those of you guys that know divergence is. All right, so that's something of interest. We are seeing GME bouncing a little bit today here. Very small bounce. You could see, again, beautiful rally yesterday into this resistance, then pulled back. I think GME is going to go lower here. I have a target of $65 right here as the next support, and eventually it's going to settle in right here at $42 to $43. All right. It was an amazing run. Wall Street Bets does show that when they combine forces, they can take on any hedge fund or even multiple hedge funds out there, which is awesome. But at the same time, valuation does matter in the long run. And what we're seeing here is that the price action is bringing it back into those levels. All right, now some trades that I do like here, folks. One of my favorites right now for a swing trade is this MAC. MAC, guys, look at this major support right here. All right, tons of support in this range. Look, pivot. Basically, look at the run, and this thing has reversed all of this upside in a matter of days. This is a huge level of support. In addition, if I throw my moving to see this here, and again, I want you guys to see this here. Take a look at this. 50 MA getting pierced right there, touched yesterday. So I think MAC could end up going green today, maybe even back to the highs of the day at 1286. So I really like this. I think within a couple days, you could see this thing back to $14, which is the 20 moving average up here. This is one of my favorite swing trades right now. All right, another swing trade that I like quite a bit is FRO. Take a look at this. You have a wedge pattern. You just bounced off the lows. Now, you might say, okay, this is a bullish wedge, right? You have a consolidation, bullish consolidation, right? But what I like the most about this is that other shipping stocks have gone ballistic. Take a look at DSX, guys. DSX, look at the run. This was a $1.40 stock. It's now $2.70 over the last few months. All right, take a look at Sino, SINO. Today alone, it's up 60%. But look, this was a $2 stock. Now it hit a high of $11 and change. That tells me that FRO, which hasn't really run yet, it's a bigger company, so that's part of it. But FRO could really see some significant upside here. I would think that this could easily get to the 200 and probably up here. There's a gap fill up around $7.45 here. So you could have an easy $1.50 upside at a bare minimum on FRO in the short term, assuming the markets don't kind of give way and fall apart here. So keep an eye on that, folks. I am a big fan of FRO. It does seem to be a laggard in a sector that is going ballistic right now, and I love finding those kind of sleepers that haven't run yet. Okay? Let's take a look at a couple other stocks out there here real quick. Apple's down about 75 cents. Nothing going on there. Amazon, again, down $10. Google's up 7.5%. Facebook's flat on the day. So, again, a lot of these stocks are kind of just pausing here. We are seeing Tesla pull back, and I always forget to mention Tesla with these big names now, but really it's a bigger market cap than Facebook, so it does have to be mentioned. And remember, if you combine the market caps of Amazon, Google, Apple, Microsoft, Facebook, and Tesla, that's huge, equaling 50%. Those 6 companies, 50% of the NASDAQ 100, just in those 6 companies. It's remarkable, folks. Absolutely remarkable. All right. We are thinking that, again, I am in the camp that I expect the market to hit some more rough patches here. In doing that, I've been slowly accumulating some shorts the last couple days, SDS, QID, by buying those. VXX I accumulated after we sold it last week for over 10% gain. I rebought it down here. So, again, I do think that you want to set yourselves up for some more volatility, as I think that interest rates are going to be the main issue here. So watch that. Again, follow me on Twitter at Gareth Soloway. Come to InTheMoneyStocks.com if you want my live trade alerts. Look for my name at the top of the website of InTheMoneyStocks.com. And obviously, just there's a drop down under my name, verified investing alerts. I put out like 3 or 4 alerts yesterday alone. We took a profit. We put out 3 new trades. I'm rocking it here. Best January, by the way, I think ever. Day trading, swing trading, it's all there. Come join us here at InTheMoneyStocks.com. Take